The hardest part of trading isn't finding setups, it's waiting. Too many traders get sucked into overtrading and making mistakes that slowly bleed their accounts dry, mainly due to FOMO, the fear of missing out. In today's video, I'm going to walk you through a trading opportunity using nothing but price action and structure. But more importantly, I'm going to show you the importance of having a rules-based trading plan and how having so will keep you patient and allow you to avoid that emotional roller coaster that sucks many traders in. We're also going to talk about the time flexibility that comes with trading and why you don't actually need to spend as many hours in front of a chart as you probably think. Let's hop in. So dollar yen at a previous level of structure. So same situation right here, right? Price is currently at a previous level of structure. This is a daily chart, so it's going to be here for a while. Let's run through some scenarios. Same thing. We know if we hold, then we're looking for shorts. However, if we violate this level, do you guys see a path to the upside? Yeah. We got our next level of structure up here. This is going to get broken down a little bit as we go down to the lower time frame, so don't worry about that. But there is a path to the upside, right? So again, you're going through your trade scenarios. We take a look at this on the 4 hour, right? We can see our previous level of structure right here. I'm going to kind of redraw in this line to make it clear. Previous structure right here. We need to adjust that line a little bit because this wicked up right there. This line, right, the high of this wick is now the level that is going to be important. Again, if we hold, then you're going to be looking for a potential short. If we violate, then we can look for potential longs. Now, if we do go short, we have a nice B leg right here that we can look for a retest. Whether you get the risk reward there or not, you'll have to see. If we violate, where do you guys expect us to go to if we violate? Some of your eyes probably lit up. Oh my gosh. This is what I love about straight moves. I don't like choppy moves. I'm a structure guy. So every time I see a level of structure, I'm like, ooh, price has to go and stop there. When we get straight moves, it's pretty clear sailing. Chris says 150.70. Alan says 149.50s. 149.50s. Alan's looking at, let me know if I'm wrong, Alan, inside structure here for at 149.50s. That would be my guess. I'll scroll down and see the answer eventually. 50 says 150.42. 150.42. Fitzy's looking at the very start of, not that, sorry. Fitzy's looking at the very start, lowest point of this green candle right here, the zone before the elephant. By the way, if you guys hear me say elephant candle, what I mean by an elephant candle is a big candle that stands out on your chart. So you can probably, elephants come in different shapes and sizes. You can probably see a few elephants, like this is an elephant, right? So if you hear me say that, it's a whole supply and demand thing, but instead of digging into the supply and demand, because I think teaching about supply and demand is more harmful than hurtful. Harmful to hurtful? No, the same thing. Harmful than helpful. Especially if you understand support and resistance, you'll just hear me call them elephants. All right. So yeah, so it looks like a lot of people, we have two levels that we're focusing on. I think it was Alan's looking at this level right here, this inside level of structure, right at a psychological number, 149.50. And then we have others looking at somewhere in this zone between either the start of this zone or maybe the high of that zone. We'll just mark out this whole thing. But either way, these are two levels that you can look for. So again, what we're doing is we're going through our process. We're asking ourselves, is this going to be an actual trading opportunity? Is there going to be room for me to make money going up if that were to happen? And it looks like in this scenario, the answer is going to be yes. You're going to have probably a minimum of what, 50 plus pips going. If you're going to that first level, you're going to have a lot more than that if you're going to the second level. So now what you're doing is you're rehearsing in your head, what needs to happen for me to take the trade, right? So this is no different than like an athlete rehearsing kind of what their movement patterns are in a match, where it's like, if we get a break and close above, then I look for a pullback. If I get pullback, then I look for RSI to go oversold. If RSI goes oversold, then I look for double bottom. If I get double bottom, then I enter, right? So whatever, that's just an example, right? But whatever your trading tactic is, this is what you're rehearsing. And then we have to go through the hardest part of trading. What do you think the hardest part of trading is? One of the hardest parts of trading. It's all hard. Everything. It's so hard. Waiting. Right? If you are a pullback trader, you have to wait for violation, this, hope that you get your signal, and then a move up. What happens is people will see this candle go like this, and you're like, oh my gosh, it's getting closer and closer and closer and closer to my thing. I gotta buy it because I'm going to be late. I'm going to miss out. It's never going to pull back. I'm never going to get a chance to enter. And you buy it right there. And then as soon as you do that, what do you think happens? That retracement starts. Then you go into the red, right? Now you're like, oh crap, I shouldn't have bought. I'm losing money. I don't like this feeling. It's painful. And what's the simplest way to get ourselves out of a painful situation? We exit the trade, right? So then you get out at that level and you lose some money. And then just when you think things couldn't get any worse, the market completes that pullback and boom, it goes up there and you're like, that's what I thought was going to happen in the first place. You missed out. Can you tell I've done this before? I mean, this is what I've heard traders do. Not that I've ever experienced it myself. But yeah, that's the emotional yo-yo. You get FOMO. You see profits being made, and I'm doing air quotes. You can't see me, but you see profits being made on the way up. You get tired of missing out on those profits, even though you're not missing out. They were never yours to begin with. Then you enter late because you can't take it anymore. Then you enter at the exact highs because we're massively overbought, right? And this thing has to reverse at some point. And then it goes down. You lose money on the way down. You get upset. You can't stand losing any more money. So you exit and you're like, I'm just going to cut my losses. And then it bounces back up and you're like, shoot. I did all this great analysis and all I did was lose money while watching the market do exactly what I thought it would do. It's like those people that buy lottery tickets and they always play the same number. And then one day they're like, I'm going to play a different number today. And they're like, crap, if I just would have played the same number I was playing for the last 15 years of my life, I would have won. It hurts. It hurts. So be patient. Don't think if this moves up, right? And this is the whole process over outcome. If this thing goes straight up here, it sucks. It does. But guess what? It was never your money. You didn't lose money or leave money on the table because you were never supposed to be in this trade. And that's the process version of it, right? And that's how you have to judge yourself. You can look at this two ways. You can whine and moan over quote unquote missing the move. But if you think about it, did you miss the move? Because what was the move you were supposed to be waiting for? You weren't supposed to buy it on the way up. That wasn't in your trading plan. Your plan was to wait for a pullback and then buy the pullback. And the fact that the market never gave you that and you didn't enter a trade, tap yourself on the back. You did a good thing. You didn't enter a bad trade. Not only did you not enter a bad trade, but you made a good prediction because you predicted that the market was likely to go higher, and that's what it did. And yeah, you may have not made money on it today, but trust me when I say like the skill of being able to make good predictions, that's what's going to bring you confidence, and there will be more opportunities. So the choice is yours how you want to look at it. You can look at it as a missed opportunity, or you can look at it as, hey, I'm proud of myself for following my rules. Because more times than not, when you break your rules, you're going to lose money. So that's what we're waiting for here on dollar yen. You can see going down to the hourly chart here. Things are getting a little bit squiggly and wiggly. We're massively losing momentum as we trade at these highs. I'll bring that that line back out, right? You can see we come in here. We got a little half rising channel, half double top action going on, massive divergence in the market. Again, this is going to be a very hard one for shorts because look at this wick that spiked down here. Where does that go? Well, right to our previous inside level of structure, which is what I said would be the target level for shorts here. So maybe that disrupts you, maybe it doesn't disrupt you. That depends on you and your trading rules. But I would love to see a break and close above. I'd love to see some relief, and I'd love to see an opportunity to buy this thing up. There's a lot more upside potential than downside potential, in my opinion. So we will keep an eye on dollar yen. Let me know if there are any questions about that. I used to force myself to watch it no matter what, but I like this more. Yeah, don't watch it. If you think about it, there's no need to watch it. If you're on a 4-hour chart, there's nothing you can do for 4 hours anyway. So like, just, why torture yourself? I get away from my charts, especially 4-hour charts. I'm like, what time is it? All right, well, I can't possibly do anything like it. So you think about this trade, right? This may put things into perspective. So with the way I trade, right, the most aggressive entry I can have is the higher high, higher close, right? The most aggressive entry. So if you think about it, right, one, I would need this current bar to close, right? Current bar to close, right? This current bar won't close until 9 a.m. Am I right with that, guys? I would need this current bar to break and close below, right? Then I would need, right? I need a retracement, right? So I need a retracement, a pullback, right? That would be another bar, again, if I'm trading here on the 4-hour. So that bar wouldn't close until my time, 1 p.m. Then, at the most aggressive way, and it typically wouldn't happen like this, but at the most aggressive way, I would need a higher high, higher close for an entry, right? Which would be another 4 hours. So that wouldn't close until 5 p.m., right? So I know that there's no, at the very earliest, as a 4-hour trader, I couldn't enter, and this is not probable, right? But I couldn't enter until 5 o'clock this evening. So guess what I'm doing? Everything else in the world. Everything else in the world. Right? At the most. At the earliest. And I can tell you what, I don't think that's probable that would happen in 3 bars. But at the very quickest, I just need to be alert by 5 p.m. And especially if we, like we spoke about earlier, if we've done all our homework already, if I know where my targets are going to go, I already know how my stop loss is going to go. I've done all the homework beforehand, right? I just need to come back, take a peek. 5 o'clock, hey, did we, and I would peek before that. Obviously, I would peek at each candle just to see how prepared I need to be. And like that timeline may shift even further down. But if I wanted to, I just come back at 5 o'clock and be like, hey, did we get that? Or a little bit before 5 o'clock, right? Did we get that higher close? Nope. All right, see you in 4 hours. Right, so the time investment is minimal if you do your work on the front half, but also you can save yourself the mental strain by not pointlessly watching something that will do nothing but torture you. Like, I'm not going to watch my ex-wife have dinner with her new rich husband. That's just going to make me feel bad. Like, what's the point? What's the point? So yeah, there's 8 hours at the 8.5 hours, whatever like that, before I can do anything, and that's at the most aggressive level. All right, yeah, all right. So let's revisit those two, and we can take a look at it euro dollar. So we talked about, as a day trader, if you're looking on a lower time frame or a range bar chart, which is just a different look at a lower time frame, you're going to have a quicker kind of signal. Here's a good example right now. We can see the pullback that's happening on The dollar yen hourly doesn't really give us too much information. Even if we go on like the 15-minute chart, a little bit more information. But if you're a day trader, these are where you're looking for your entries, right? So we're setting up right now. We have about 2 minutes left, but we're about 2/3. Well, in 2 minutes, we'll be 2/3 the way done a 3-bar reversal. If you guys want a good example of a 3-bar reversal, just look to the left as we, come on, arrow. I'm trying to talk and make a cool point. As we just have one here. You guys see this? We didn't get the higher high, higher close, I don't think. I can double check that. Didn't get the higher high, higher close right there. But this would be a good example of it, right? So we came down with a high momentum candle, shaboink. We currently have a pin bar doji candle, right? Indecision with bullish rejection. Where is that rejection coming at? You guys can see this nice little shelf right here. If you were to get a higher high, higher close, that would be an example of one of our reasons for entry. Now, again, this is only if you're a 15-minute chart trader, right? If you're not supposed to be trading a 15-minute chart, should you be taking this, guys? Yeah, no, right? Stay on your time frames. Stay on your allowable time frames. You guys are new. Like you have free reign as a trader to trade however you want as long as it's rules based, meaning when you're going about creating your trading style. But part of those rules is like you have set time frames that you use, and you use them for very particular reasons. So you don't want to make that mistake of being a trader that is supposed to be analyzing the daily chart, and then you find yourself on the 2-minute chart taking trading opportunities based off the daily. Like, that's just no, because you will find what you're looking for. If you look hard enough, you'll find a reason for trading, and you don't want to do that. So if you're a day trader, though, and you can trade on the 15-minute chart, this would be a good example of a 3-bar reversal, and this could be a reason to buy. And again, we've already predicted where price is going to go to. Boom, there you go. So we got the second bar. Now you're sitting back and you're saying, if I get a higher high, higher close, then I buy next bar market. And what happens if I don't get a higher high, higher close? What do? We buy it anyway. No, right? We wait. Because guess what? Here is our pullback, right? We came here. These were the highs that were broken, right? We came here, right? This is our outside return. You just wait for another opportunity. We're still in the zone. We're still in the zone. So the reversal can come anywhere in the zone. If we get it here, nice shelf, nice level we can look at. If we don't get it, all right, well, maybe we get a secondary opportunity. Maybe the market travels a little bit lower and we get it down here, right? So we just be patient. Wait for your opportunity. Again, going on the theme of FOMO earlier, you don't need to freak out. Be patient. If you understand structure, if you understand the key levels that should be respected and the decision point areas, meaning like, hey, if price action breaks this level, I need to run away, versus like, oh, price action can break past here and we're still cool. It just adds a calm to your trading because it takes the panic away. So now you just wait for 15 minutes or like, again, come back 10 minutes from now, right? If you're someone looking at this, you should already have your stops measured out. We already have our targets predicted, right? Again, the theme is we're doing all the work beforehand. You're just waiting for the entry at this point. So you're like, hey, I can't possibly enter until 9:45, right? Till 45 past. So do I need to sit here and watch this red candle shake and bake? No, like I'll go do something. I'll come back in 10 minutes. It'll give me 3 minutes to kind of get my position sizes ready and all that fun stuff if you haven't done that already. But you just wait. And then in 10 minutes or 13 minutes, whatever it is now, there will only be two choices. Either you get the signal or you don't get the signal. If you get the signal, you take the trade. If you don't get the signal, you don't take the trade. And then you reevaluate and wait for the next opportunity, right? This is how we want to control our trading, guys. We don't want to be panicky traders where we're freaking out and we do something based on emotions. We want to be prepared in advance. And then we wait. So, and again, you look at this on the range bar charts as well for a little bit of a different look. Let me just go with pound dollar. We're looking at pound dollar for the same thing, opposite direction. So if you guys remember, same thing, pound dollar, where we're pulling back right now. I hope you picked up some valuable lessons from this video, and stay tuned because in the near future, I'm going to do a follow-up looking at this same setup, but going over alternative entry reasons. I'm also going to teach a pretty cool trading lesson about a simple candlestick formation that you can use in many different ways, all depending on your trading preference. So hit that like button, subscribe if you aren't already. That way the YouTube algo knows that you like my stuff. And when that video does come up at the end of the week, hopefully it's going to be shot into your feed, and that way you won't miss it. All right, until next time, plan your trade, trade your plan. A lot more content here on the site if you get bored. Yeah, good luck in the markets this weekend. And yeah, that's it. That's all I got. So just going to awkwardly fade out the video. Yeah.